Thanks for being here. So, hospitality is a cyclical industry. We all know about it. And I was just thinking, investing in a hotel is like stepping out of your house, fully prepared for any eventuality on the weather front. So you have a straw hat on your head, a raincoat on your body, and perhaps snow boots on your feet. And you think you are well prepared. And just as that feeling of settling down is coming in, a hurricane called COVID-19 comes and strikes you and smashes everything up that you have prepared for. So today we are all gathered here in a group discussion format to understand what is the landscape of investment after this devastation caused by COVID. And instead of just doing the banking and private equity jargon, we thought we'll give it a different perspective. Our thought is that there is a different sentiment for a different sub-asset class for hospitality. So here we have a panel which represents very many different asset classes. And the idea is to engage and try and understand how each asset class is evoking a separate sentiment from the investors. So I have Rohit from Appaswamy Real Estate. His company has his own seven hotels of their own. And not only do they own those hotels, they have created and nurtured a homegrown brand, the Residency hotels, which over the years has gained enough traction and respect from all stakeholders. Manu over here, many people know him as the ex-CEO of Nirmaya, and he is on course to start a new venture in the luxury wellness space. Some of you may not know that he also is a licensed fund manager and has a very interesting take on the stock markets. So you can quiz him separately after the session if you need some tips. Deven over here is a techie at heart and wants to deliver hospitality at scale through technology. He's currently, he is the founder of SaffronStays, and we've seen over the last 1.5 days, I have never heard villa rental and homestays, these words, ever before in any other HICSA as I have heard this time around. So clearly you are in the right space, Deven. And Vimal, he's the true guru who's been there, done that. Vimal has owned hotels, has operated hotels in the US and in India. And most of us know him for the work that he has done in Golden Tulip Hotels in India. And he's one of the core founders of AM Collection. So thank you, panelists, for joining us in this session. So I thought enough gloom and doom has been spoken about. There is definitely a silver lining to every cloud. So one common question to all the panelists: what is that one silver lining that you have seen emerge for your business post-COVID? In no particular order, maybe Rohit, we start with you.
I think, when we had the lockdown last year in April, it was where things were very uncertain. Occupancies, revenue went to zero. And every time, then what we realized, every time there was an unlock, we saw some demand coming back. And now we know that people want to get back. They want to go, they want to travel, they want to, whether it's business or leisure, they want to continue living their lives. So I think things do look positive, where actually in our hotels, which are, we're achieving almost 60-65% of what we used to achieve pre-COVID currently. And of course, we have a hotel in the Maldives, which is of course a different story altogether. But even in India, without international inbound, demand is quick to come back. So as long as we don't have lockdowns and people are feeling safe, I think this business will resurge, in not too long. So that gives us hope. And from an investor point of view, that's not going to deter someone like me from investing in new properties or renovating my properties. Because, by the time we get anything done, I think all this will pass. So I think looking at the customer sentiment and the fact that they want to get back to normalcy is actually motivates us to, get back to working on new projects and launching new things and not hold back and think, this is the end of the day or end of the world.
Right. Vimal?
I think one of the things I heard during this conference was the large pipeline of hotels that all the brands seemed to be talking about, which was kind of heartening to know as well. I mean, we see, Achin's comment was about 60% will see the light at the end of the tunnel, but the tunnel could be 5 years out or 2 years out. And one of the things that you said, Saurabh, was cyclical nature of our business. And cyclic nature also relates to capital. Now, cost of capital in India is very high, be it equity, be it debt. Equity comes in, but equity rather be in equities, because our friend here sitting here, Manu, is probably more to give us a return on equities than he would give it on a hotel property today, honestly.
That's right.
So I think as an asset class, hotels always had a long view, and I think people need to have a long view on it. Don't have a short-term view of an asset. It will perform historically, I think. And when we are dealing with very high land costs, we are always starting in the hole, I call it, from day one. So you dig the hole deeper by borrowing higher and higher capital borrowing. We are digging the hole deeper and deeper. It's going to be a while to pay the piper, and it's coming time. Having said that, the room shortage or the room ratio that we have in India compared to any mature market is we are at the very nascent stage. So I think we have room to grow. We have to have patience in our capital. Patient capital will do very well. And I relate an experience in the US in the 80s when what we call RTC days, resolution trust days. Insurance companies poured a lot of money because they could put in money, cheap money out there at a long investment cycle, not the PE guys. PE guys will have a 5 to 7 year horizon. It's okay, where is the project? In India, sometimes the project doesn't see the end of the light in 5 years. So that time horizon is very different. They're looking for mature assets they can go and monetize. So there will be capital, I think, will move in. It's a question of timing. Let's get up structure stuff done. One of the things we saw, all the highways being built, all that. I think that's foretelling a good story for Indian hospitality long term.
All right. Manu, what is the silver lining you are seeing?
Well, in my opinion,
If any.
The silver lining is in the profound learning that started the moment COVID happened. For way too long, our industry has been driven by thumb rules of expenses, thumb rules of incomes. And a moving train, you never try and change direction. You can only just edge here or edge there. This COVID allowed us to reset and look at everything on a zero-based budgeting. There was no thumb rule. So, you had to stop and restart. So for way too long, we've operated on pretext of so many number of employees per room, depending on the star categorization or heat, light, and power and everything. But when there's no revenue, you reset everything. And I think that allows everyone to understand and accept the new reality. And that started the moment COVID happened. And I think that is still continuing. And industry has gone through its own kind of, evolution in the last 18, 19, 20 months. And in my opinion, we will emerge so much more stronger on the other side because we are rethinking the entire way of doing business.
Yeah, that's a good point. I mean, I was listening to someone and they said that you would see that the yields which have never come in hotels, you will start to see those yields trickle in because a lot of these cost cuts will be permanent in nature.
I mean, one thing just baffles me always, and it's baffled me for the 27, 30 years that I've worked in the industry. You go to a pub in London, and two girls are catering to 100 people, they're flirting with them, and their quality of service is like fantastic. Here you tell your F&B manager, कि भैया why do you need like 20 people in your restaurant? And he'll have like 35,000 reasons for that. So, you could convince your team members and your HODs and all to relook at things. In fact, I send somebody, I've usually try and, whenever I travel abroad, I ask one or two of my senior people to accompany. Because, sometimes, people who are in departmental heads, they don't get an opportunity to travel so much. Okay, look at how the world operates. So people are beginning to realize that this is also possible.
Sure. Deven, for you, it was completely different. The glass was half full or full?
So, COVID-19, the whole pandemic has honestly been like the way demonetization was to digital payments companies, right? For the rest of the economy, probably it was a terrible scene to happen. But the digital payments companies like Paytm and Google Pay and all of them just took a very different turn. And they are here to stay. And habits have been formed. And those are irreversible habits. Something very similar is happening to the so-called alternative accommodation engine. For us, we are a startup. We raised our Series A 2.5 years ago. And we were in a burn stage. Okay, we were burning money every month. When COVID hit, we genuinely thought we were going to shut down. Okay, and we were preparing ourselves mentally and otherwise for the worst. But then we took a step back and we did three central things, right? One, actually, it gave us tremendous amount of time to think because they had nothing to do apart from baking, stuff in your house and cooking and watching Netflix. Yeah. So first thing that we did was we cut down on our pan-India presence. From 175 homes across the country, we came down to 50 homes only in Maharashtra. And those 50 have grown to 150 only in Maharashtra. For example, Alibag itself has 42 homes. Lonavala has 35 homes. So we just went hyper local, hyper focus, and super, cluster oriented. Second thing that we did was we realized that money has to either come from an investor, or the second person who brings money is the customer. And we went after the customer. So we reinvented ourselves, our positioning for the customer, and we became profitable from October 2020, right? So from 2020 from a burn that we were doing earlier to 2020 onwards, October onwards, we're consistently profitable, and we're growing 5% a month, right? That's the kind of top line growth that we're seeing. And the third thing that we did was we completely reinvented ourselves and pivoted to technology, right? So we realized that the only way to scale back in Pan-India would be to leverage technology to the hilt. So now we are a digital first company. We're launching everything on the mobile. And you said it right. I mean, I used to be a hacker, in my past career. I used to head cybersecurity at EY. But all those skills are back. And we are now a tech company. Masquerading as a hospitality company.
Right. You have company over there. You're not alone. A lot of people say that, and by the way, this is a group discussion, so feel free and we'll get the mic somehow to you. It's not too far. A lot of people have called COVID an accelerator of change. Clearly, I mean, in every single business, whether you liked it or didn't like it, the change didn't happen with the pace it was earlier happening. So, may I just, perhaps he'll start from you this time. Just give me one or two key changes that accelerated for you and which you think are permanent or are going to be permanent.
Customer behavior. So, by force, international travel has stopped, right? So a lot of the money which was actually going outside the country, those people still have money, those people still have time, and those people still are desperate to get out of their homes because they're cooped up. So they realized that they started looking around and a drivable destination. And somebody like us who was there for the last 5 years screaming from rooftops that we exist suddenly became mainstream, right? From an alternative accommodation became mainstream. And I have had conversations with McKinsey partners or law firm partners or CEOs of companies and industrialists who've called me back and saying, Deven, you've changed a habit, right? Now we're going to only do this. I don't see a reason why we should go back to a mainstream luxury hotel. I know there are hoteliers here, and I'll be beaten for having said this. But I think these two products will coexist. We are increasing the size of the pie. Leisure hotels will exist. I go to a leisure hotel. I stay in a leisure hotel, but in a different frame of mind. So if I'm going as a couple, I stay in a hotel. But if I'm going with a group of friends, I will stay in a villa. right? If I'm going to celebrate my 50th birthday, I'm not 50, but if my 50th birthday party, I will do it in a private villa, right? So what you're using that product for, and how, in what mind frame you are, that is going to change. So the market for all of us is going to evolve very, very, very different. Leisure particularly. I don't know about business. I'm not a...
Rohit, would you like to kind of look at it from the view of either your business hotels in Tamil Nadu or the St. Regis that you have in Maldives?
So from our hotels in Chennai and Coimbatore and the other cities, I think the hygiene standards. I mean, not that we didn't have it before, but that extra sanitizing, labeling, having those guards, and being a little more cautious in doing all this. So this has made our team focus more on doing this to make the customer happy, and that's kind of it. Also, this has also helped differentiate good hotels from great hotels. Like customers are noticing everything now, how they're keeping the counters, how they're doing the maintenance. So they're really observant today. So the standards of the Indian customer, I think, has gone up after this because they're looking, they're reading up so much online, and they know what to expect and all that. As far as, and also the other thing is cost efficiency. I would say I think it has made people more aware. I think everyone's spoken about this on the conference. So running costs wise, from the operating side, we have been more conscious, and we've got new learnings which we'll take forward. So this kind of accelerated that. And as far as St. Regis goes, I think we're doing pre-COVID business. So I think it's business as usual there. And only thing is there, the challenge is where the testing is important there, because we test everyone when they leave and when they enter. And handling guests, if they test positive and they're there, we have to quarantine them for 14 days. So that's which hardly ever happens. But those have been the challenges. But I don't think anything has changed. I guess a bit of cost control there as well, because when we started out last October, we were shut for a few months. So when we started in October, we didn't know how good business. No one knew how good, how Maldives would, because it was open, and it's like a Pandora's box. Are we going to get a lot more cases going to go up since we're opening up the skies fully? And luckily it didn't, and the testing helped. Right. And so initially we kept the cost low, and we were operating a very high end, like $1,700, $1,800 ADR hotel with a much lower staff than what we were doing during pre-COVID. So we had less butlers, less staff, and all that. But and slowly we took it up. Then December we saw we were like 75% on the books in November end. So we said we can't handle these fancy guests with with a lean ship. So we quickly got people up and all that. So I mean,
it was a completely different set of customers who came in first and
exactly. And I think quickly every month the GM sends, I need more people. Okay, we keep, and he's and luckily the reviews, everything is good. But we had to quickly approve these things. So I don't think we were able to cut down so much there in terms of manpower. Maybe some costs, but predominantly I think more in Tamil Nadu and the other places.
Sure. So let's talk about the elephant in the room now that we've kind of warmed up. And perhaps, Manu, you could take this. So, leverage, that's the main problem of our sector. I mean, every time Vimal and I speak, it's always cost of capital that keeps coming back as the main issue for the sector. The cost of capital is what it is. Now, and heavily leveraged groups have really suffered. I mean, for no specific faults of theirs. A 20-year-old hotel would somehow survive with a lean look. But what do you do for these hotels which actually need proper recapitalization? Hotels or companies which are maybe new or which have a lot of debt on them. So, I mean, we see only three ways. Either resurgent cash flows will somehow cover up for all the ECL, GS 1, 2, and 3 that people have taken. Wishful thinking, but it is what it is. Or promoters will bring in fresh equity into the company. Difficult maybe, I don't know. Or some monetization will happen, or NPAs will happen, and then the banks will come into the forefront. So what do you see? How do you see this entire thing playing out for assets which have high leverage?
Well, thank you. That's a loaded question. But, I've always realized in life that the umbrella is only available when it's bright and sunny. Umbrella is only available when it's bright and sunny. When it's raining, firstly, you don't get an umbrella, and if you get it, it will be 3 times the cost. And that's exactly the suffering that we all have gone through, and everyone's going through, whether somebody owns a big 5-star, 400-room, 5-star hotel or a small hotel, because every business at the end of the day has to fend for itself from the cash generated from the business itself. You know, iski topis can keep going round and round, but at the end of the day, if the business is not able to generate cash to pay for the cost of capital, and equity also comes at a cost. So even when promoters bring in equity, it's not, we often say that equity is free. Equity is not free. I mean, equity, the promoter has to have a cost of equity as well, which is generally a lot more. So I don't think that unless and until there is an entire change in the way people do business, or the cost of capital comes down from a government perspective, or the industry gets a status of infrastructure, 2%, 3%, 4%. Look at the way US capitalized all their businesses. Anybody who was paying taxes got checks. I mean, businesses just started getting checks. And in India, we were only doing bhaiyo or behno or mitro, and nothing happened, really, right? So I think that either the ADRs have to go up, or the cost of construction has to come down, or the financial institutions, if this industry has to survive, it has, the financial institutions have to be mandated that, you know, the duration of loans and, you know, facilities should be as much as 20, 30, 40 years. And that's the only way the industry will be able to survive. Because at the end of the day, every hole must be filled with some cash, whether it's private equity. So passing the parcel can happen, but at the end, the last person holding the parcel will go heads up.
Yeah, I think, you know, what Manu is saying, the capital obviously has a cost to it. But having said that, banks are only in one business, is making money. Where do they make money from? Lending money. So it's a question of cycle that will come. Banks will be back in that business because they got to come back. That loan officer that was there will move off and somebody else will come in and his job will be to go give loans. It will happen. It's a question of timing. Just wait. I mean, they're already setting up these bad loan banks which will shift a lot of these loans into those bad loans and start to clean up their balance sheet, and they're going to come back to lending. They can't just sit there with that money paying deposit of 3-4% and then do what with it? So it's a question of timing when the capital. There should be some alternative capital available for debt as well. I think it's maybe some debt funds or something else, some structured way of raising capital which has been available in the Western sense. That needs to come to India as well. So as a hospitality, to see maybe a securitized mortgages, some kind of bond issue, something that can be done to support the industry. It's an integral part of business. You cannot grow your IT companies if there are no hotels for anybody to stay in. I mean, you cannot be Infosys and opening up dorms of 800 beds and all. They can't. They're not in that business. They should not be. But where do that happen? So it has got to come up, and I think some kind of land use changes and the FAR changes, all that has to come in. It's a lot of structure. We're talking about a lot of stuff which is government related, which I don't think is going to happen. So I think as far as the private industry is concerned, look at alternate source of capital.
Yeah, that's where I would like your, this direction, this discussion's direction to also go into.
I think alternate source of capital, the equity market is a great source of capital. We have seen it. I mean, they're running crazy right now. So where is that capital coming from? So it should come out. And now we have an asset that can be secured against, which is the hotel, which is the brick and mortar. It's not a figment of somebody's imagination. There is a brick and mortar. There's an asset value there. Why can't that be securitized with something? You know, many years ago, I'm talking about many years ago, we put a deal together with Steve Rushmore was involved. We did a securitized mortgage of hotel loan. We was the first one. And we went a single A rating, went for double A, did a triple A rating, and there was first one. This is going back to Lodging Finance Corporation of America, it was called. And this is many moons ago. Why can't something like that be done here? So that all hotel owners have access to capital. As long as the credits and all that come, true, why not? a long-term capital, not this 8-year loans and trying to pay it off, and the debt, your constant becomes 25% to pay off that loan. You should not be.
Sure. I mean, one looks at road projects, and Canadian pension funds and all those kind of companies are putting in so much money into road projects. And I mean, there are enough people in this room, and anybody can correct me. I think they are looking at an underlying 7 or 8% yield when they are looking at a long-term investment into that. The question is, how does a hotel provide that 7 or 8% yield? The hotel doesn't know if tomorrow it will even have 2% yield or 3% yield. And post-COVID, it will be even more difficult to promise something like that. So, how do we break this logjam?
I mean, again, go back to cost of capital, because you have to start with that. Our land cost will remain high because we will all have a dearth of sites, good sites to go by. I mean, Rohit was talking about his development in Pondicherry, but that was a site that they bought 15 years ago.
That's right.
So it was a historic cost. Today, if he bought that site today, I don't think he would afford to build a hotel on it. And so I think that structural changes should come in, and mixed use will be another avenue, so that there is another way of monetizing some of that asset out there with something else, so that we leave the higher floors to a hotel, so therefore that kind of development will happen in an urban setting. In resort setting, strata sales could be an excellent way to monetize and bring in some capital, which is low cost capital to you. That will happen. I think timeshare industry has proven itself in India. I mean, we see that with Mahindras and Sterlings and all that. I think that you will see as well. So alternate sources of capital are coming through. Maybe not in that same sense, but I think we will be able to access alternate source of capital in the time to come. The Wall Street or the Wall Street of India will wake up to that there is a business out there, and there is a way of figuring out there's an assets out there. When these bad loan banks will ARCs and all that, what do they do with those assets? They got to come back.
Sure. I mean, I open this question to the entire audience out here. I know we have always been very focused towards having the ownership at a central level for a hotel. And keeping it very pure and clean. But in a sharing economy, isn't it time for hotel industry to look at strata title sale, or you can call it fractional ownership? I don't think as an industry we've given it a good shot. I don't think we have done enough where we can say, no, this doesn't work. I think there is a lot which needs to be done. We have written it off far too early. And I mean, in places like Brazil, there are no big banks which can, give you big loans. How do they make hotels? And their tourism is like 10x of India's. How do they make those big hotels? And they have 700-room hotel. 600 people will own the 700-room hotel, managed by a brand. So, I mean, they have been able to put a system in place. My question is, why can't we do something like that? And bear in mind that individual investor isn't looking for a double-digit return, perhaps, because this is, there is a value to an asset class which is totally secure, etc., etc. Any views? Maybe, Rohit, you are our real estate champion over here.
I think you're like the structure you're saying is more like a REIT. You're like a unit holder, and you don't control the day-to-day decision. You control your dividend. So basically, whatever NOI the REIT receives, 95% you dividend out. So it's a cash cow to whatever percent yield the market dictates it to be so. So that definitely can work, because REITs have already worked here, and you can list it as a REIT. Of course, a lot of big hotel companies in India have chosen to go public. I'm not sure whether they can use it. I think they might be able to use a REIT model as well. So I think it's already possible if they have, of course, with a certain scale and good enough book. I think they can, that unit holder concept can work, where they own certain number of units.
REITs don't allow hospitality
Not
per
yet.
se, not
Okay,
yet.
not yet.
It has to be 20% of a larger REIT.
Okay.
But yeah, I get your point.
No, but so for example, you were mentioning about a 20-year-old hotel, whether to renovate it, it's going to have a lean look and all that. So I think, we started our first hotel in 91. And those days we made the money back in 4 years. It was the boom time, the 90s, in Chennai, in Coimbatore, even in Residency Towers, which we opened in 2003, 180 keys, we made the money in 5 years. right? Today, because that was, the time when there were no rooms in Chennai, right? And it was, and today, and I think Maldives is also a very similar story. And we opened the hotel in 2016, and I think in the next 3-4 months, we're closing out the debt 1.5 years ahead of the schedule, because it's, because the consistent performance, and we also put 45% of equity in the project out of the $130 million project cost. So we made sure we had a very strong capital structure. Now, over the last 1 year, what we've been doing is we've been renovating, just to giving an example, so what we did pre-pandemic by chance, and we've been doing it for a few years, the hotels which have been doing well, like the Towers and the Coimbatore, so we have leveraged these hotels, raised debt, cheap debt, single-digit debt, and invested in real estate projects. So our company, Appasamy Real Estate, is the largest developer in Chennai. So we do about 1,500 crores of real estate a year now, and so we are able to raise cheap debt, and it takes shares in projects, and we made sure it generated profits, and that profits actually paid for the renovation in the last 1 year. So we've actually spent 60-70 crores out of the 130 crores from the Chennai hotel for renovation already. So the asset value of the hotel and the strong cash flows pre-pandemic made it possible. And we've done 3-4 big deals in Chennai. Almost 400 crores of land buy in the last 4 years in this kind of a structure. So what's helped us, the hotels, it's like an LRD in office space, right? You borrow against your rentals and you buy, and you invest in the next office building, right? So, or the next office land, right? So what we did is we did it in the advantage in doing it in a residential project, which is all we do now. We don't do office space anymore, is that you don't hold the asset. You get all cash is back, right? So you get your money, profit and interest, everything back in 2.5 years. So it's a quick cycle, and we're able to keep, and now with the asset, and we haven't put all the money, some of it back into getting the property back into top shape. So, we're also committed as promoters to keep the property in, top shape, and, we'll have some money for expansion, some money. So it's like an FF&E reserve of sorts, right? But, you take that reserves and you plow it back into profitable ventures, and then keep the asset quality up, and you invest. And some people may ask, you built a hotel for 60 crores or 70 crores in 2003, and today you're putting 120 crores in renovation, right? Isn't it counterproductive? I said, you have to look at it for the next 20 years, right? I'll leverage another deal and I'll buy land for another 500-600 crores over the next 6-7 years, right? It'll generate the cash flows and it'll do it. So it's made it possible for me to do this, to remain, relevant in multiple spaces.
You were also telling me about this strategy of premiumization that you took as your land cost of your existing assets kept crawling up. Why did you talk?
So a lot of our assets are in prime locations in Chennai, Coimbatore, and Pondicherry. So to get, if I were to take, the return on investment is high, but the return on current value, obviously, it may not be as high because land value is just shot up like anything. It's right in the center of Chennai. Right, so even if I were to buy the land 40 grounds in Chennai or the other property, we have 2 properties in Chennai, the yields will be very low. So premiumization, and we are upgrading the properties to, we're having iPads in all the rooms and things which are not even the bigger brands are doing. And we thought, the eventual goal, I don't know if we're in the process of achieving it, is higher revenues, better GOP. So if we have achieved it to some extent in a couple of properties, another property we are in the process of doing it, so I can't declare success as yet. But I hope we achieve it, So where we're able to charge more than brands, we're already charging more than brands in some places, and achieve a good 45-50% GOP like the good old days, up from the late 30s. So we're still in the late 38, 39. We're not. And as an investor, I'm still very optimistic. That this can be made better because we're already seeing small changes, cost efficiency. Giving better results.
This is a good example of how multiple asset classes are kind of paying for each other, and you're leveraging them for each other, and that's a good point.
Just one more, even on a standalone basis, it's not like one real estate is completely supporting. 19, we did from 19 to this year. Let's leave. Last year was just too much of lockdown. We're almost at 80% in revenues of pre-pandemic, and we are still generating a lot of cash from the business. Because mainly Maldives, and we are positive in India. So it gives us no reason to lose interest or trust or belief in this business, right? So I think it should continue.
Sure.
I must say, Rohit should take another talk, proper, on capital allocation and asset sweating. Very well. absolutely impressed. Yeah, yeah, yeah.
I think it's a mixed use again. We were
Correct.
talking about is how do you monetize that mixed use rather than a hotel. I mean, a hotel has changed as well. We all know it used to be very heavy F&B centric hotels. Not anymore. They are now downscaling, maybe meetings. And meetings, what I heard in the panel is sort of that hybrid meetings are coming through. That means that the physical meeting sizes will get reduced. So it means technology will play another part to come into that. That means that we have to innovate. We have to innovate and bring technology, innovate our building a hotel. How do you take a 20-year-old hotel, but maybe it's a strategic location, needs to innovate.
Yeah.
Now, how do you find the money? And that's really where the trick will be. How do you find the capital to go in? Capital will come to good locations, will always follow good locations, and I think good operators, they will follow. It's a question of time. We are in a bad cycle right now. This is not how the business will be. We are, and all of us have short memories. We'll forget what happened in 2020, come 3-4 years from now, we'll be hunky-dory, business as usual, we are off having parties every day, it will come to that.
But just to add to your point, sir, I think meetings itself as a concept, the MICE that we used to call it, will see an absolutely irreversible change. You know, just the Infosys company alone, they've added 250 basis points to their bottom line because of their travel and, you know, office costs. 250 basis points on a $20 billion.
By cutting down on.
Yeah, yeah. Well, that's a 2.5% of margins to be increased on a $20 billion sale is like amazing. And they never want to go back because you speak
Well, we live in a hope that Infosys will lose a contract to TCS because TCS is traveling and staying in hotels. I mean, why would otherwise
No, I'm talking
people
of
come out of their
TCS as well.
Zooms?
I'm talking of TCS. I'm talking of all the IT companies.
Sure. No, I get where you're talking about. I mean, clearly some part of, I think Patu yesterday spoke about it, that some part of the business is gone, of corporate travel is gone.
Yes.
But he said that, and I kind of tend to agree, some part of the supply is also gone.
Correct.
So they would kind of nullify each other,
Correct.
and
Yeah.
and that's probably going to keep the equation balanced. Let's change tracks. There's so much of liquidity. We're talking about an amazing time in the entire stock market and public markets and all of that. And new age businesses are just raking it in. There is Zomato, the story is well told. Sanjeev Bikhchandani's, it's considered to be the best investment anybody has ever done. And it's not hospitality, but let's say closer sector. Oyo is about to come in. So, Deven, this is a brick and mortar sector. Traditional brick and mortar sector. It's not changing to a tech sector tomorrow. What do we need to do to bring in this capital? As a techie, where do you see us lacking?
No, I don't think you guys are lacking, and I am not in a position to comment on that. But I'll tell you something very interesting that's happening in my space, right? So, traditionally, realtors invest money building the hotel, and some operator comes in and runs it, right? In my case, I'm noticing, I'll give you an example of just Goa, just Asagaon, 750 villas are right now coming post-COVID, which are being lapped up, purchased by people from Mumbai, Delhi, all over the place. So who's the realtor here? The realtor is some Sun Estates or some Isprava or whatever. Who's the investor? You and I, who are buying these villas. So, and who's the operator? Somebody like me who's happily coming and saying, you know what, 750 villas, let me corner at least 100 of those, right? 100 means 500 rooms because, and that's an inventory which somebody else has funded. Now you have to understand what is that individual looking at. That individual is looking at, today if I invest in Mumbai, a house in say Cuff Parade, a 2-bedroom house in Cuff Parade will cost me 5 crores. That same money will get me a super beautiful villa in Goa. The rental yield in Cuff Parade is less than 2%. The rental yield, if I even give it to a SaffronStays, is 5 to 6%. Rental yield, committed revenues, plus the brand value or the ego boost value of me. I own a villa in Goa, I own a villa in Alibag. Plus, I can go and stay it whenever I want because it's a phone call away, right? So, who is the realtor? The realtor is someone else. Who is the investor? Somebody else totally. So this is that sharing economy which is happening, which is democratization of capital being deployed, or democratization of even an operator like me who comes and says, you know what, I cannot run thousands of homes across the country. I would be smoking, pot if I say I will be able to run thousands of homes across the country. I will rely on people who have the ability to provide that service at that location, who are probably independent operators, and I will empower them with technology. Right? So my CRS, my PMS, my channel management software, which has been developed in-house, all of that has been developed in-house. I'll give it on a platter to this individual saying that, you know what, run this, use this, and come under my larger umbrella brand. So what am I? Am I a hospitality company? Am I a tech company? Who am I? So I think these are the new age companies which are going to come. People like us who are thinking like this, who are not thinking like an operator, who are not thinking like a realtor, who's looking at opportunities which this COVID has actually opened our eyes to. They were always existing, but I think COVID has just opened our eyes to some of these very different ways of looking at who's a realtor, who's an investor, and who's an operator, and who's a tech provider, right? And who's a brand. That's
Sure.
the fifth, yeah.
Sure.
So very different ways of.
Yeah, I mean, there was a statistic that 50% of Airbnb owners are millennials. So,
Wow.
I mean, the caricature of a hotel owner for us was somebody who was in her 50s or something, right? I mean, this is very different.
They have more rooms under their, not management, but in their system than any of these hotel groups, large.
Sure, I was only talking about India.
Yeah.
So India, Airbnb is very small still, but I mean, to think that 50% of their client base is a millennial
Yeah, but,
tells you something.
I just want to caution you guys on this home rental business.
Hmm.
A lot of jurisdictions around the world are cracking down on this
That's right.
because legal issues. And I have had a friend who in New York City was giving his apartment to Airbnb, and there was a fire, and insurance companies didn't want to pay. They said it was being used illegally didn't have any licenses, didn't have anything, and he was out of for a very significant amount of money to repair that apartment.
Totally.
So you'll see that, I think that as this development, the government's regulations will come in, start controlling
So
that.
when it becomes too big to ignore,
Can
they
I-
shall not ignore.
May I?
Yeah. Please
And
respond.
so it's very interesting, and I answer that in two ways. One answer is what I give to the press, and I say, you know what, we are working towards regulation, and there's a bed and breakfast license that the government of India has, and all our homes are, we aspire to get that license, and we operate under all of that. And there's another answer I give to investors and say, any industry where there's regulation, that industry is not an industry where it's a sunrise industry. It's an industry which has happened. Any industry where the regulatory lines are blurred, you still don't know what regulation is to be involved or to created, is the industry to invest money on. Why? Because you are shaping the regulations. You are the co-creators of sitting down. So today, for example, we sit down with the Tourism Ministry under Honorable Minister Aditya Thackeray and sit down with his Principal Secretary and we are crafting the regulation which will govern us. Why? Because I know you go to Lonavala, you throw a stone, there is an unscrupulous operator who's running a shady business under a villa rental. God knows what cameras are hiding there. God knows what safety measures are being put in. But there are people like us who are willing to step up and say, you know what, we'll regulate ourselves in the larger interest of the industry, in the larger industry of you and I as tourists and travelers. So safety, you're right. I mean, we work back with insurance companies and actually crafted a third-party insurance which not only protects the homeowner, also protects the guest. So if some fire, some damage, something happens, the homeowner is protected. If there is some injury or accident that happens, the guest is protected. And in that process, I as an operator, I'm also protected. Now this never existed. But we actually made a presentation to them, educated them that if this exists in the traditional hotel industry, why is it not existing in my space? Somebody has said yes, and it's a matter of actuarial calculation, right? What's the probability? They gave us a policy, and we're happy with it. So I think this whole business of these sunrise industries, somewhere I think is the biggest opportunity if you look at it positively, saying that it's not regulated. Very good. It's scope for regulation, scope for crafting regulation. And it's a matter of time.
I mean, it's a good take. I kind of relate to what happened with Uber when Uber was growing and moving up. Let's change tracks again. I think Achin alluded to wellness and how wellness can change the way hotel P&Ls look like. Manu, you've done it for quite some time. Can you quickly tell us about the economics of it? Because a lot of people see it in two different polarized factors. Either it is purely medicinal, therapeutic, like the Jindal style, or it is purely a simple spa, two therapy rooms. So what's the commerce over here?
So obviously, Nirame has always been a wellness brand for the last 1 decade or so. And we've always stuck to our core belief that a holiday must have a tangible takeaway. Most of the rooms these days, 3-star upwards, have very small incremental changes amongst them. But 3-star to 5-star, generally, the specs are more or less the same. And during the COVID times, what also happened was the length of stay started increasing. People wanted to stay within the hotel. And I think for a reasonably long period of time, this is likely to continue. So we thought that how do we move from a wellness brand that's just maybe perhaps giving your a 4-night, 5-night, or in some cases a 7-night, 14-night panchakarma to a measurable, tangible takeaway. So we diversified our business model into functional medicine. Functional medicine is, going to the root cause of a problem, but not compromising on luxury. You're not saying that you're not having a glass of wine or you're not having a good steak. You do all the things that you go for in a holiday. Because, a lot of Russians used to come to Niramya, especially to the Kovalam Hotel. Now, you tell a Russian that you're here for a 28-day stay and you're not going to have a vodka. He'll die of that shock. Right? So, wellness itself has to come along with luxury, with all the little, indulgences that form an integral part of a great holiday. And then you need to find your space as to how you change a person's life, how you transform a life, and how you make the holiday tangible.
So how does it change the investor's PL?
Yeah. So when you're looking for a hotel room, you compare just the hotel room because breakfast is complimentary. But when you're providing a solution, you never go to your lawyer or your doctor and say, "Yaar, theek laga le yaar." In hotel we are still, which is the cheapest, the best rating and the cheapest. You do your own calculation in your mind, either I want to find the cheapest or the best rated or a combination of two. But when you're saying that, you come to my place and take a 7-night holiday, and at the end of it, there's no hospital environment, and at the end of it, you know what? You can check your toxicity levels. If you take a BP, there are 3 problems on this planet. They're going to affect each one of us: hypertension, diabetes, and obesity. Now, if you and these form the basic fundamental of all the diseases on the planet. These are the root cause of everything else. Now, if you start sorting this out during a 7-night stay, and not curing but preventing, and educate people how to prevent yourself from getting into, because you're all getting into, they're biomarkers, they're specialized machines for that. Now, if you can change people's life and their thought process, I'm going for a holiday, but I'm on the borderline of diabetes, I'm on a borderline of obesity, I'm on borderline of hypertension, and if I do these 3 things while having a great holiday, I would check out a transformed and a slightly or a reasonably well repaired body. And that adds to your bottom line, because then you're providing a solution. When you provide a solution,
so a typical, let's say, sorry to cut you short,
it doubles your yield. It trebles your yield.
Give me a sense, give me some numbers, as in, let's say a typical Niramaya kind of a hotel, how much percentage would come out of just the therapies of the top line?
So if you remove the room, because rooms are demand supply.
Incidental.
Yeah. I would say that just the wellness is 120% of the room revenue.
Okay.
Which is substantial, right?
Right.
Because then what you're doing is you're saying that, we're going to put you on a special diet plan.
Right. And what does it do to your EBITDAs? EBITDAs would be
From a
late
typical, we all
30s or-
used to those 30-35% GOPs.
Right.
It goes to 60%. It goes to 55-60%.
55-60%.
If you're able to crack it, if you're
Right.
able to crack the model
Right,
and able
right.
to position yourself, sell it well.
So tell me, if it's a Niramaya, which you don't need to put on a high street, you can choose a location where land is cheap, and where you are doing a 60% EBITDA, or let's say 50% EBITDA to be on the conservative side, aren't your yields like north of 12, 14, 15%?
Yeah, of course. But again, a lot depends on, at the end of the day, cost per key, the cost of construction per key.
Sure, I mean
Today, if you make a reasonable hotel, you end up spending 1.5 crore. When you take everything into account, make a 30-room hotel, you're down 45 crores. 45 crores cost of capital is about 7 crores a year, just interest. That means if you're doing a 50% GOP, you need to do a 14 crore revenue.
Correct.
Out of a 30-room hotel. That means 50 lakhs a key.
Correct.
So if you're not able to do 50 lakhs a key per annum,
Then it's going
then
to
you should
bleed
not
to
be in
death.
this business.
Yeah.
Otherwise, you're gradually bleeding your asset, gradually destroying equity day after day, year after year in any project.
Ladies and gentlemen, we have about 7-8 minutes. I would really like to open this up for some Q&A. So please just shoot. Go ahead if you have any questions.
I want to ask you, you mentioned about, you go to London, you go to Madrid, and you see two young ladies taking care of 150 people. So, and you constantly talk about this to, people who work with your senior team. So have you figured out an answer?
Well, if it was just yes or no, then the answer is no. But if I was to say that there's a gradual attitudinal shift in the people, because nothing else is acceptable to me, or nothing else, unless we are close enough, is acceptable to me, people also modulate and change, right? So very early in my life and career, I said that I don't want to have a 15,000 rupee steward. I want to have a 25,000 rupee steward. But he should be worth 25,000 or 30,000 bucks, because then his attitude is different, his interaction is different with the customer. He's enjoying his work, and when the customer interacts with your employee, his morale also goes up, and he's not treated like just a mundu. So you get what you pay. And our industry, the problem is that we want to run 5-star hotels by having 15,000 rupees stewards. And I think that should change. Educate a lot more. Spend time with people. Don't treat them like waiters. Larry Page picks up his plate and goes into the same cafe as most of his employees. But in India, there's a huge hierarchical system. कि भाई मैं GM हूँ, मैं MD हूँ, मैं वो और वो.
I think, but
वो
Manu,
bathrooms.
in his defense, I would say that this is also on the consumer side of it. I mean, our consumer is the most pampered person. I mean, and it starts with the way we bring up our children. I mean, a millionaire's child would mow the lawn over there to earn his or her pocket money. Over here, who does that?
वो हमारे DNA में है ना चक्कर
हाँ,
खराब.
so you know-
क्योंकि we are still subservient as
on
a.
the other side of the service line is.
as
I think,
a nation.
the reason I asked this question, and, some great inputs, of course, I look after 2 large hotels, 900 keys. The thing is that we all grew up, and what happened, to SaffronStays and many other people had great learnings during the post-COVID pandemic era. For the mainstream hotels, our learnings were very different. Our learnings were that we were down from 90% occupancy to 40% occupancy with higher headcount in the hotel, because double occupancy percentage was 99%. The asset was sweating like no one's business, but the yield was not there. And the reason for that is that we have all of us Indians in the hotel. Everyone double or triple occupancy, because kids, they don't think are guests anymore, though they sit on a seat and, they waste or eat more food than an adult. So, and that's why, because it is a very intriguing point, because we all grew up in homes where we largely have help, right? We don't do our work. And when we go to a hotel, we think it should be better than my home. So, and that's why I spoke about that we also, whilst we have internal consumption, the consumer is a completely different frame of mind. When you are in that nice pub in London, and if your beer is not immediately changed, no one is going to call you or write on TripAdvisor and tell you I'm going to write on TripAdvisor. So I think these are some deeper issues as well. Of course, I agree that there is a compensation correction, there's a profile correction, there's a dignity of labor, and there are many other opportunities. But this is a genuine issue as well. One of the reasons Airbnb is different in India from the world is because people who go to host today expect a hotel-like experience, which may not be a case in Western world.
I want to just add a couple of thoughts for just an alternative perspective to the question. It's an interesting one you raised. 20 plus years ago, I was running a 240-room extended stay hotel in the United States, and my total staff strength at the time was 13 people. And I say that not because we were doing a great job. I say that because a lot of the Western world works on the back of processes over people, and there is a set system in place that is been tried and tested till it has been brought to close to perfection. And that works in cultures like the United States. And to your point, I completely agree. It may or may not work in cultures like India, where we're so strongly service-oriented and so needy, for lack of a better word, from a consumer side, that sometimes it becomes extremely difficult to achieve those ratios, for instance. And you'll see an Olive Garden or an Applebee's in the United States, actually, or in Western Europe, running on really, really efficient rooms-to-staff ratios or cover-to-staff ratios. And you don't see that at the Chili's here. Just trying, to draw a comparable of the same American brand in India and in the United States.
The difference, I think, is, I remember first time, one of the times I met Saurabh, he was the premier in Whitefield. And I saw him clearing the table I said, no, that's a GM that's worth hanging on to. He was there clearing the tables. I remember meeting him at a lunchtime, many, many years ago. He was busy. Yeah, he was busy. He was clearing the table. But how many of the GMs we have, all of us have, will do that? None of them.
Some of them will.
We have grown up with that thinking that is an hierarchical, I'm the GM, I need to have a suit and tie. I mean, we put our engineers in suit and tie. What the hell? I mean, we should be in a dungaree. But we put him in a suit and tie because we want him to look nice.
So just to add to that point, I stayed in a beautiful hotel, a 20-room hotel called Neri in Barcelona, right next to the cathedral. It was a Relais Chateau hotel. And when I checked in, the GM was sitting there. When I checked out, the GM was sitting there. 3 nights I stayed there. The GM was at breakfast, lunch, dinner, serving, also doing housekeeping. And I asked her, an old lady of maybe 55, 57, how much does she get paid? She was getting a solid 3,000 euro a month. So it was not that she was underpaid 3,000, 4,000 euro a month, maybe 5, something like that. But very well paid person. But she was the owner of the place. She was taking so much of pride. And then she would call me for a drink as well. And then said, no, hang on, she'll serve the breakfast. So in India, we had most of us pocket squares, nice cufflinks standing there. And the only conversation our GMs can make is, sir, have you had a great stay? Allow me, give the card out, and then that's the end of the GM story, unfortunately.
The attitude as well, and the consumer attitude as well. I mean, their expectation when they go to a hotel is the same, that if they're paying 2,000 rupees or 10,000 rupees, they own that room and that hotel or that piece of it for that night. And they can demand whatever they want. And today with all these TripAdvisors and all of that, they give them almost that right to bitch and moan, as we saw it.
And I think as hoteliers, we also have to evolve by saying that this is it. This is what you're paid for, this is what you're getting, and you'll get the best of it. हमारा कॉन्फिडेंस ही डाउन हो गया है सॉरी बोल के हमें सॉरी बोलने की आदत होगी होटेलियर्स को we just don't have the courage to say shut up, that is it.
So I think we still have, I think the time is up, but I'll just slip in one last question in good jest, unless somebody has any question. Please.
I think to exit so early would be stupid.
Time agnostic.
Yeah, okay. Yeah. But no, I think there is just so much headroom that exists in India and outside India as well. For example, all of us as Indians travel to Bali and we yearn for our Indian hospitality there. I would love to have villas in Bali and Indian hospitality for. So there's just so much headroom out there. To exit today would be stupid. I think the ideal situation is I would love to have a financial investor who sees us to a particular level, and then you exit out to a strat investor, and then eventually do either a majority take in, and then give us a final exit. But there has to be exit, right? Like a one fine stay exited too early. I think now there are really good models like Vakasa has come on. Saunders is doing a $2 billion listing. Inspirato is doing a $2 billion listing, SPAC listings. Vakasa is a $5 billion SPAC listing. So I think SPAC is a great exit for some of these entrepreneurs. But yes, I mean, I don't think IPO is the way to go. Maybe Oyo is so large that IPO is the way to go for them. But for us, I think we have to fold up into, one of the strat players, an Accor or a Marriott or a Taj or whoever, who buys us at scale. Not at right now because we're too early, too small, and we're still figuring 90% of our problems. I don't think 100% of the risks are known, 100% of the problems are known. A strat player comes in when a large part of the problem solving is done. Financial investor comes in when 90% of the problems are still unsolved, because that's where the opportunity is. That's where the upside is. And that's why we're heavily looking for a financial investor who would probably bankroll our next 3 years or 4 years, and then we look at a strat. I think that's as candid and honest an answer you can get.
You can.
I'm not bullshitted at all.
But you can thank Anshu for that perfect plugin you got.
I know. He planned that.
Yeah, please go ahead.
Legislation of homestays.
Yes.
And what do you see in the future next? It's still varied and the growth has been phenomenal.
Yeah.
So what do you think would happen as far as homestays legislation is concerned?
See, I think, hotel industry, hotels and offices are an industrial age concept, right? If you look at pre-industrial age, there were no hotels, there were no offices, and we all stayed in each other's houses. So in some ways, both these industries, whether it's work from home or it's staying at each other's homes, is actually going back to a construct. So regulations will also starting looking at these new age businesses. For example, Uber, there was no legislation around Uber or Ola, but once the industry became mainstream, the regulations evolved. So we as a new age industry, and I don't like to use the word disruptor, because disruptor means you're eroding value in an existing industry. We are not eroding value in any pre-existing industry. We are creating a new industry. We are creating a new category which doesn't compete with the hotel industry. We are actually a separate product, separate, completely new category. So we will work with regulators, sit down with them and actually put down our problems and concerns that we feel should be addressed. For example, even things like, fire safety, or fire exits to be marked in a home. No, we do it. I don't think any other player does it, right? Or the training on snake bites and the injections for venom, anti-venom is kept in many of our homes. Now, why do we do that? Because our homes are in corners of the country next to a lake in the middle of a forest, and you will have snakes there. You are the intruder there. The snake is not the intruder, right? So you got to train your caretakers not to kill the snake, but actually to catch it and probably release it somewhere else. No, we do it. Nobody else does it, right? So when we are adhering and placing ourselves and holding ourselves accountable to the highest standards, regulations also have to be in some ways placed at the same level of standards. So today we are working with Maharashtra government and coming up with a self-licensing, automated license. So you actually go on the website, upload documents and get your registrations done. We're working with that. So it started.
Yeah,
I don't think any other state is even thinking.
Actually, it's a wonderful concept.
Yeah.
Before it is misused.
Before it is misused. Yeah, and what is happening is, some other friend was complaining about a competitor. One part of me was very happy, but 99% of me was very sad, because that person also made a statement thereafter. My husband has said, over a dead body, I will go to a villa again. Okay, and that just told me that as an industry, right, we are failing. And the industry has to come together and say, you know what, let's mark ourselves and adhere to some really high standards, right? So that the customer who's looking at us also gets a superlative experience. Maybe use a hotel in a different context, business hotel in a different context, a villa in a different context, and let's coexist.
I'll just add something over here, and then let's wrap up. Lunch is ready. I think we have a different problem. Our problem is that hotel industry is considered to be too elitist, right? I mean, all the regulations are anti-us. I mean, we don't get cheaper land, etc. It's more expensive than anything else, right? But on the other hand, the way Airbnb is playing the story, and One Fine Stay and probably SaffronStays, their narrative is very different. They are saying we are enabling the single individual person who doesn't have any other source of income. We are enabling them. We are empowering them. So the pitch is very nice. And the pitch shall be, according to me, seen in a very positive light by the regulators and the politicians. Yeah. So actually, it depends on how you spin the...
actually, we positioned it to the Honorable Minister, saying that, look, I have 150 homes. Each of the homes has local people who work for us. So the cook is actually a lady from the village who we have trained up and shown how to, and her delicacies, the local authentic delicacies, are something else. Right, and you not get that kind of, not those vegetables, not those, the stuff that she's dishing out, and the style on the chula, and that style also you won't get, and that's the experience we are suckers for, right? So the employment per villa is for 4 to 5 people. So the staff ratio that you spoke of, and I was looking at my own ratio, is almost 1:1. So, but all those are villagers, and they give their heart and soul for welcoming the city slickers. And at the same time, there's zero attrition, right? There's no holiday, no leave. At best, in Maharashtra, they take Ganpati holidays. But otherwise, they're not going to their respective village. There's no holiday. They're working all the time. So the government loved the pitch, local jobs for local guys, very good. Let's just work with you very closely. And so that's the pitch.
Yeah. That's all the time we have today. Thank you, ladies and gentlemen. It was really nice.